Okay, fixed spread. Spread is going to be, let's do 1.8 pip spread. Actually, 2 pip spread. Yeah, 2 pip spread. Close to reality. History on charts is going to be 200 days that we want to see. 14th March, New York close, gold, and perfect. Start the simulation over here. So we have no charts open at this point. So what we're going to do is we're going to bring up some charts here first of all. We're going to start with the weekly. We're going to add the daily chart, 4 hour, 1 hour, 30 minutes, maybe 15 minutes. All right. White is too bright, but we're going to stick with it. Okay, so perfect. So first of all, what we want to do is we want to go towards the time when we will actually be trading. So we're going to go towards, I think it's going to be 6 a.m. 6 a.m. So this is what, 7 p.m., 8, 9, 10, 11, 12, 1, 2, 3. London open, 4, 5, 6 a.m. Eastern, right? So this is where we're normally coming through the charts over here at 6 a.m. Eastern. And if we zoom in at this point, we're looking at the weekly candle. We're looking to see like how the weekly candles came down. It was a bearish momentum. This weekly candle closed with a rejection here. So it may mean maybe this week is going to go up, or maybe this week may start to go down because of this, like, you know, very, very heavy bearish momentum over here. So just because of this, we can't have our bias, right? Because if we're looking at a session, we need to identify what the bias is going to be within that session. So looking at the daily time frame now, we have some more information. Let's do scale fix over here. So looking at the daily time frame, we have some more information. And before we talk about that, I want to look up my line studies, and I want to look up my charts right here. Okay, so previous daily candle closed bullish with a huge rejection to a downside. This may indicate that this current daily candle may continue moving up to fill the wick here to the left-hand side. That's like 111 pips away, right? So that's just a basic idea that if price does move up, maybe this is going to be the target where it may come into, because this is also a rejection back on the 3rd March over here as well. You know, so was it 3rd March? Yeah, 3rd March. You know, so it could be an idea, it could do that. Or if we get selling confirmations on the 4 hour or the 1 hour, then maybe there's an opportunity for price to, like, you know, continue moving bearish at this point as well. So let's take a look on the 4 hour time frame. Now, looking at the 4 hour, we have some more information over here. We have some market structure forming. And the way we can see market structure over here is that possibly we have a support forming at the bottom. 4 hour candle came up. It rejected around this area where the previous 4 hour candle rejected. So maybe this is an area of rejection, right? So we're going to keep this in mind that, okay, 4 hour candle came up. So maybe it rejected an area which it rejected before. So we got to keep that in mind over here, because this may be some sort of a range. So we're going to clone these over to the all time frames. And let's go to the 1 hour time frame. Now, looking at the 1 hour time frame, we have a whole new problem over here. And the problem over here on the 1 hour time frame is that now this zone, now notice how we do the zone based on a 4 hour, and if you just look at it only on the 4 hour, we can conceptualize that if you do break below 1726.80, we can continue moving down to fill this wick on the 4 hour, which is 42 pips away, right? If we break below that area. But if we map this area on the 1 hour time frame, we can see how this kind of, like, you know, comes into overlaps these candles, right? So this is actually very, very wrong. So we need to bring this a little bit down to basically make sense of the market structure on the 1 hour time frame. So now the support makes sense, right? Support makes sense. This resistance we had based on the 4 hour time frame, obviously, like, you know, it's a retest or it's a touch on the 1 hour. True resistance should be down over here, but we got to take a look at this wick on the 30-minute time frame here as well. Oh, so 30-minute time frame is a resistance at that point. All right, makes sense now, right? So now on the 1 hour time frame, we can only see that price moved up, created a wick at the bottom, came down, and candle closed like this, right? Candle closed with a small body with a big wick. This may mean that the 1 hour candle can continue up to fill this wick. If we measure this range, this is like a 36 pip range. up to resistance is like a 51 pip range. Looking at the 4-hour, we have a huge rejection on the 4-hour, candle closed bullish. So maybe 4-hour candle went up, retraced to continue moving up with a lot of volume, right? That may be an idea. But on a 30-minute time frame, we get a whole new, idea over here. And the idea is that, price went up, came down. It may form a support to continue moving up, right? That's an idea that we may want to execute on. So let's take a look on the 15-minute time frame here. 15-minute time frame is also rejecting at this point. So yeah, I mean, I think this could be a very, very good idea if you do continue moving up. So this is what we're going to do. I think it's going to be better to wait for a candle to form bullish to give us that confirmation of a support form. And then based on that confirmation, I think it's going to be a very well planned buy for price to continue moving up. So that's something we can execute on. All right. Or if you can break below the support, then obviously we can continue moving down from this point. So yeah, I guess we're going to wait for that. And then we're going to see if we really do continue moving up or do we really do continue moving down. Let's play this. The play is in order right now. We want a support to be established around this area to give us confirmations that price will continue moving bullish. If you don't get that support established, then obviously that's not going to happen. So let's speed it up here a little bit. We're just looking for confirmation on the 30-minute time frame, maybe 15-minute time frame. Yeah, see, we need some confirmations of support forming here. 30-minute, let's move the support down, right? Because we want the support to be formed somewhere right over here. This will be perfect if you can get a confirmation like that. Speed it up here a little bit. 15-minute candles coming to a close. So in this case, there will be no impulse entries. And the only reason why there will be no impulse entries is because, there's no, we're just waiting for candles to close to give us some sort of a confirmation. That's all what we're waiting for over here now. If you wait for the candle to close, should we click on the next bar button? No, I think we can speed it up here a little bit. All right, there we go. 15-minute candle has closed. We closed with no wick on the top, right? So now we got to wait for the next 15-minute candle to close, because having no wick to the top is basically like, a no-no. For me, at least, it's a big no-no. So we're just waiting for the candles to close. I like to watch candles form because it gives me an idea when it's moving down, when it's moving up, what it's doing at that point. So I like to have that idea, right? So let's see what happens here. This 30-minute candle is about to close here now. And there we go. 30-minute candle has closed a weak bullish candle. Does this mean there's a good opportunity for price to move up? Not at this point, no. If you do break above the high of the 30-minute candle, our resistance is like, oh, actually it's 20 pips away. Okay. So yeah, I mean, still, we want to wait for a healthy 30-minute bullish candle to close, because look, 15-minute candles are still consolidating over here. Oh, wow. Yeah, look at that. We're breaking the low over here. Can we do this if we come into this range? It's like a 51 pip range. Yeah, if we can continue down to 1727, I think if a candle can close below 1727, then we can have an opportunity for price to continue moving bearish. If that is, it's a big if. All right. 15-minute candle has closed again. We close bearish, nothing to do, nothing to see. 30-minute candles zone is still holding over here. The candle is about to close here as well. So yeah, let's see how we close on the 30-minute time frame. There's one concept I've been back testing, and it's based on, okay, let me just pause this over here. Can look for sell. No, we can look for sell below 1727, below this support, right? So this one concept I've been testing is that, like, let's say, for example, if we're going to move up, right? Let's say we're going to move up and this stop loss is going to be too big. Can we have stops based on the previous 30-minute candle? Because this was just a liquidity grab over here. That's something I've been testing, and for sometimes it's not been working. You know, maybe the timing is off or whatever. Okay, so the 1 hour candle has closed. We closed like a small bullish candle, not much. The 30-minute candle closed a weak bearish candle, kind of like a doji. So in this case, maybe would want to look for a impulse entry if we break the high of the previous 30-minute candle for price to continue pushing bullish. That's something we may be looking at this point. If we break the high of the previous 30-minute candle, which would make perfect sense for price to continue up. But we need it to wick down just like it is right there. Oh, look at that wick. Awesome. If we break the high, and if, yeah, we need to break this high for price to continue up. Respect this low and break the high. Why impulse on a dojo at this point? Impulse on the doji candle because we had, let me bring my arrow here. Because look, this was a rejection. We came down. We formed support with this candle, bullish candle, weak bullish candle, still bullish candle, right? Formed support. Then we had a doji candle. This candle broke the low of the previous candle, but it still closed above this area, right? We still closed above this area. That's something very, very important, right? We closed above this area, even though price opened and closed at the same time on this candle, we still closed above that area. And if this candle breaks the high of the previous candle, then there's a high probability we can continue pushing bullish. Looking at the fact that we also have a rejection down over here, and we're also moving in pre-NY volume at this time as well. So putting all those things together, I think it would be a very, very good idea to anticipate the move up. So let's see. We're still 7 minutes in over here on this 30-minute candle. We wanted to break the high of the previous dojo candle. Oh, there we go. That's our entry point right there. Stop is going to be below this 30-minute candle. So we're going to go with what? Risk percentage. We're going to go with 2% risk, I guess. This visual mode over here. So we're going to do a buy. Stop is going to be right down. We're kind of like a bigger stop, 19 pips over here. Looking at price to continue on to this area right there. And let's go towards trades. We're going to remove take profit because we're going to secure at around 15, 17 pips. And then we're going to leave the rest run. Right. So we're moving into oh, okay. Nice. All right. Birds are in the house now. 30-minute candle is very solid. You can uncheck the TP when you open the trade. Oh, okay. We're going to do that the next time. All right. Coming up over here. Correct me if I'm wrong, but 14 GMT is 10 a.m. Eastern. 14 GMT here is around 7 a.m. Eastern. Yeah, it's around 7 a.m. Eastern. Okay, right here, 16 pips. So we're gonna secure positions. Let's secure close partials. We're gonna secure around 90% right here. Going for 1-to-1 risk reward and not 10 pips? No, because look at this, right? Our range is like 24 pips, right? 24 pip range. If it's a 24 pip range, securing 10 pips here on gold when the range is bigger, I think it's okay to secure more. 16, 15 pips and leave the rest running. So we're going to leave the rest running over here. Looking on the 1 hour time frame. Now, this is very important when we are looking to see whether we should put stops at break even or not, right? Because on the 1 hour time frame, if we're moving up and looking on the 4 hour time frame, if we're bullish here, 4 hour has a very, very high probability to fill this wick through the left-hand side. Now, the question is, how do we let that happen being in a trade? It's visualization, right? If we want the 4 hour candle to fill this wick, obviously the 1 hour candles are going to be multiple candles. Oh, excuse me. Yeah. So the 1 hour candles are going to be multiple candles, right? So I think it's going to be better to let the candles close. Actually, okay, we already secured this right here. So it's going to be better to let the candles close and then try to see if we can trail the stops below the 1 hour candles in the anticipation that the overall 4 hour can continue up to fill this wick. So this 30-minute candle here is about to close. And so we're just going to be trying to see if we can trail the stops below the 30-minute candles because, we're not risking much at this point. We secured 90%. So I think it should be okay. So let's see. So it's just one trade for today. Oh, the 30-minute candle has closed bullish. Very nice. Very, very nice. Let's take a look on the 1 hour time frame. 1 hour candle is still open. We want the 1 hour candle to close. I think it's safe to say we can. Oh, wow. Look at that. Coming down over here. Can we add another position here? But we don't want to overtrade since it's Monday. We already secured 1.5%. Yeah, 1.5%. Okay. Let's speed up the 30-minute candle, go to the next 30-minute candle. We closed bearish. Overall, 1 hour candle has closed bullish, right? So if we look at this 1 hour candle now, we can see that we are making a higher low and we're making a higher high, right? So what does this tell us about the next candle since we're coming into NY open at this point, right? So now you got to ask yourself a question. What's the probability that the next candle will just go bearish, right? Versus what's the probability that the next candle, as long as it respects this low, is going to continue moving bullish, right? Especially looking at the 4 hour where we are bullish, looking at the daily time frame, we're bullish at this point, right? So you just got to ask yourself, okay, what's the probability of a certain thing happening based on a time frame? If you look on the 30-minute time frame, obviously we have a rejection right over there. But on the 1 hour time frame, bullish bias, 4 hour time frame, bullish bias, daily time frame, bullish bias, weekly time frame, who cares? It's like on a very, very high trend over there. So just for practice purposes, we're going to do like what? 0.5%. Let's do 0.5%. 0.5%. We're going to take a buy right over here. The stop is going to be, stop is going to be below this 1 hour candle. And yeah, I guess we're just going to anticipate it to continue moving on. Bullish. This is just for practice purposes here. So I'm going to remove take profit. This is only based on the 1 hour time frame, 1 hour candle formations for this candle to come down, make a lower wick, and then to continue pushing up to fill this wick, which is around 22 pips away actually. Not bad. Right? So we're still like 5 minutes in, 6 minutes in. Market structure makes sense. 4 hour candle is about to close. That makes sense. So, oh wow, look at that. It's coming straight down over here. Let's take a look on the 30-minute candle here. 30-minute candle is just consolidating. We're just looking at the 1 hour time frame at this point. Our bias is based on the 4 hour time frame. And then we're also looking at the daily time frame here as well. Right, so this is on the higher time frames. So remember, on the higher time frames, the smaller time frames can wick up and down. They can have those volatile moves, but on the higher time frames, we're expecting them to have cleaner moves, cleaner price actions, cleaner market structure. So I guess that's why or how we're moving up at this point. So probably gonna close this one right here, put stops on the one we had earlier on. And just that's it. Let this run. Probably gonna get stopped at all. Got stopped out. Okay. Right. So we added a position based on the 1 hour time frames. Let's move on to the next candle. 1 hour candle closed bullish. This is the start of the new 4 hour candle now. See the 4 hour candle. What's the probability it's gonna move up? Same idea, right? What's the probability that this 1 hour candle is going to continue moving up and the 4 hour candle will also continue moving bullish? Very, very high probability, right? Where's the stop going to be? Probably below this 1 hour candle. And then you're anticipating it to come up over here, 30 pips away. We're not going to execute the trade. We're just going to probably see it happen over here. Oh yeah, there we go, right? Happened over there. Tapped that area and came back down. Oh, wow. Damn. Oof. What happened here? Yeah, no news. Came up, boom, straight down. All right. Let's move on to the next session. Took one trade here, very, very easy trade. I think we were blessed to have an easy trade. All right, let's move on to the next session here. 11, 12, 13. All right, so we're still consolidating over here. So we're going to remove all analysis. We're going to remove this. Go to the 4-hour time frame. So 4-hour can stay the way it is. 4 hours just consolidating here, I guess between 1734 and 1725, almost like 90 pips, 83, 86 pips over here. Big consolidation. Looking at the daily, previous daily candle closed bullish. This current daily candle, we're not sure whether it's going to continue moving up or is it going to continue moving down. It's in the middle at this point. Weekly candle is whatever. Let's take a look at news. We have retail sales happening. They're expecting lower numbers. All right, they're expecting lower numbers over here. Okay, so 4 hours consolidating. Let's try to make sense on the 1 hour time frame. Now, looking at the 1 hour time frame, what we can see is that our recent price action, what it's saying is that we went up, we created a resistance, we rejected that area, came down and made some sort of a low, and now we're creating a resistance here again, right? If we're creating a resistance here again, what's the probability that the next candle can wick up and then continue moving down to fill this wick at 1728 and continue moving down towards 1726, around 48 pips away. So that's something very interesting to look at. So let's take a look on the 30-minute time frame. So we're going to remove all analysis and we're going to try to see if that makes sense on the 30-minute here as well or not. All right, to remove all analysis, let's go towards the 1 hour time frame. We're going to clone these areas on the 30-minute. And let's take a look here. Okay, so 30-minute candle closed with no wick at the bottom, which means there's no range for the next candle to go down, right? So whenever you have a candle that kind of like closes, as in there's no range for the next candle to go down, that's a telltale sign that maybe it's not ready to continue moving down at this point. So maybe we gotta wait here a little bit, right? Let's take a look on the 15-minute time. And 15-minute candle also closing with no wick at the bottom. I mean, yeah, I know. So I guess for sells, we would really want a candle to close bearish, something like this. To close bearish, something like this, and then have the opportunity for the next candle to possibly continue down with a lot of volume. Like visually, this would make sense. And this bigger candle, this one would be our trading candle right here, but this is the confirmation we need at this point, which is not present because the candle is closing with no wick. Whenever a candle closes with no wick at the bottom, this means there's no range for the next candle to go down. Even on a 1 hour time frame, we see that it may go down. So I guess we'll have to, I mean, I'm a very cautious trader and I'm probably going to wait over here. If someone wants to take a sell, you can say it and then we can take that sell. But other than that, I don't think it's necessary at this point. All right. Let's see. Oh, in other news, okay, so we talked about sells. Let's talk about buys over here as well, right? If we break above 1732, there's an opportunity for price to continue up in this range till like, what's this? 1736, 38 pips away. Also in a 30-minute time frame, if we can break above, 1732, we can continue up over here. Clean candles to the left hand side, so that could be a very, very good possibility. So let's see how this 30-minute candle closes. If we close bearish, we'll get a confirmation to sell. If we close above this area, we can get a confirmation to buy. Just gotta wait. Oh, uh-oh. All right, take a look at this. What's going on? We are closing above this area on the 30-minute time frame. Looking on the 15-minute time frame, this is awesome, right? Now, since we're in a time of volume, now you got to ask yourself again, well, what's the probability price is going to move up versus what's the probability it's going to move down, right? I personally think there's a very high possibility we're going to move up. But the question is, where are we going to take an impulse entry? Are we going to take an impulse entry above this wick at 1733? Or are we going to take an impulse entry as this new candle starts breaking the high of the previous candle? What are we going to do? Right? I think what we can do is we can have dynamic entries, right? 70-30, okay, 70-30, high probability to go up. So we can do dynamic entries. Dynamic entries are going to be, as we start breaking the high right here, we can add an entry. And then as we break the wick over here, then we can add another entry. Break of the long wick, I think. Okay, perfect. So we're going to do both, right? Since it's simulation, live money is not at risk here, whatever. So we're going to do both. We're going to take an entry as we break the high at this point, and then we're going to take an entry as we break the high, like, above the next candle right over here as well. All right, so let's play it right here. All right, let's see. It's good that it's wicking down, because the more the candle wicks down, better opportunities we get for a better stop loss, right? So as long as it's wicking down, see, the probability of it breaking the high of the previous candle and moving up increases as it wicks down more and more. So I think the way it's wicking down, as it breaks the high of the previous 30-minute candle, I think that's going to be a very good entry to take a trade right here. In case we miss it, I may want to put a buy stop right here, which is like 4 pips away. 4 pips away. Right here. Stop loss is going to be below this candle. TP we're looking at, somewhere over here, somewhere. We're probably going to remove it. And then maybe have another buy stop above this wick here. And stop obviously below this wick. 1-to-1 risk reward. Yeah, so these buy stops are only based on the anticipation that we break above the previous wick and then we continue on pushing bullish. That's the only reason why we're having the buy stops at this point. All right, let's see what happens here. Oh, one buy stop got activated. Looks like the second one is going to get activated here as well. Oh, nice. We did get activated. Both of them got activated. Moving nicely in profits at this point. I think at around 10 pips should be securing some positions. Very, very nice trade. Very easy trade. Candle closed above that area. It moved up. Speed it up here a little bit. 39, 15-minute candle about to close. Are we gonna get that good move or no? Let's see here. Got 15 minutes left. 15 minutes left for these candles to close. Oh, there we go. We're at 11 pips on one entry. Gonna close this one, the good one. The bad entry we have, I think it's going to be a better idea to kind of like, let's see if we can move up a little bit more. I want to secure it, but if it comes down towards break even, I'm going to close 50% and leave the rest running, because the probability is for it to continue moving bullish. That's the probability. The candle is coming down to a close here as well. It's kind of like tripping out. So let's see if we can trail the stop based on a 15-minute time frame. Right, so this is our 15-minute candle. I think we can bring the stop. Oh, there we go. We're at 11 pips at this point. Awesome. So probably put stops at in profits. Oh, didn't secure. Okay, there we go. New candle has started. New 1-hour candle has started at this point. 11 pips in profit is going to close partials, close 90%. 1 hour time frame. Yeah, nice. All right, if we continue moving bullish, awesome. We got a very, very big range over here. Almost 16 pips left to go at this point. Let's take a look on the 4 hour time frame. 4 hour is very, very troubling because the previous 4 hour candle is bearish. So we just don't know whether this 4 hour candle will continue moving up, or will it, like, just reject this area and come down. That's the only problem with this 4 hour candle here, that we don't know what's going to happen. Let's look at the 30-minute time frame. Oh, nice. We are moving up over here. So it's a big rejection right here. This whole area is a huge rejection area based on a 4 hour. Look, previously we came here, rejected, we came here, rejected, came over here. It's a big problem, right? Here previously we let the positions running longer because, like, we had much more higher momentum here. But here we have a big rejection, so that's why we're kind of like being safe at this point. I mean, as you can see, positions got stopped out and we're coming down at this point. 30-minute candle closed bearish here as well. All right. So this is our support on 30-minute time frame. We're expecting it to continue bullish, but it kind of like, died over here. Oh, it did move up over here. Okay, no worries. All right, let's move on to the next 1 hour candle. Oh, wow, what happened over here? 30-minute candle, 15-minute candle just came right back down. Damn. So if it's coming down towards a support, can we break the support to continue bearish? Because if this is a support, then we got a resistance right here. Don't want to overtrade, but yeah, how big is this range? It's like a 31 pip range over here. Oh yeah, we're just consolidating over here now. Yeah, we're just consolidating. This is the NYSE open at this point. NYSE open. So let's take a look on the 1 hour time frame. 1 hour candles are, oh, okay. 1 hour candles are creating a support right here. If we do break below this low, I guess we can continue on moving down. We also had news over here. Let's take a look at news. So news came out. Interesting. They're not showing the news outcome over here. I wonder why. But if you do break below this low, I guess we can continue moving bearish. Can that happen over here? This is going to be a NYSE move if you do break that low. Let's see the next 30-minute candle. Oh yeah, nothing. Nothing, just range. All right, let's go to the next session over here. So far, we're up like 3.5%. Oh, damn. Oh, wow. Gold did some somersaults over here. Went up and came right back down. Interesting. Love gold when it does that. All right. London Open, 1000 hours, 3 a.m. Eastern, 4, 5, 6 a.m. Eastern right now. Okay, let's take a look on the daily. Daily is still bullish. Previous daily candle closed a weak bearish doji candle. Nothing happening at that point. Basically, we opened and closed at the same time, so it's nothing happening there. Looking at the 4 hour candle, we are kind of like in a range at this point. This 4 hour candle closed. It closed a bearish candle, but I guess if we can break above this resistance, there's an opportunity for price to continue moving up to 1741. So that's a target we can look into, right? For price to come up on the 4 hour candle to fill this wick over here, or if we can break below this support, then there's an opportunity for price to continue on moving down to probably fill this range down over here as well. So this is something that we can look into based on the 4 hour time frame. So this is visualizing where the 4 hour candles can potentially move into, right? So now let's take a look on the 1 hour time frame. Let's remove these zones here. Let's put up a resistance right here. Now if we do break above 1737 or 1737.90 or even 1738, this is the 4-hour wick fill that we talked about, 31 pips away, right? This is a very, very high potential for price to continue. If we break below the support, this is around 1734 or 1734, 1733, 70 or 80, then going down is a little bit of a problematic area because, you know, we had a little bit of a consolidation here to the left-hand side. So we would need a lot of volume to push price below this area. So far, ideally, I think we're just waiting here to see where price is going to break. That's it, right? We got a resistance on 30-minute time frame. All we need is a candle to close above resistance or close below support, and then see where price can go. Let's take a look at the news over here. So we have no news coming in. We have FOMC later on. Oh, we have FOMC later on. Awesome. So this means gold may just start consolidating over here. Yeah, gold may just start consolidating over here till FOMC. So either way, if we do get a move, if we do break out of this consolidation before FOMC, I think that could be a very, very, very good trade before FOMC even starts. So interesting. I guess we can trade news. All right. Let's see here. Let's see where we end up moving from this consolidation. But if you do break below this low, we're coming down towards, you know, 1729. That's going to be pretty good. Yep. 1729. We will need a lot of volume to push price down to this level. A lot of volume. Oh, look at that. 30-minute candle is already moving down over here. Oh, wow. We're moving down quick. Moving down quick, son. Can you tell what news works with gold? Yeah, any USD news works with gold. So you see USD, we have building permits. These are low impact. It's not going to work at all. We have FOMC. FOMC is going to work a lot. NFP works a lot. CPI works a lot. Sometimes we have ISM news for USD. Oh, we have pound rates as well. Yeah, sometimes we have ISM manufacturing at around 10 a.m. Eastern, I think on Wednesdays or Tuesdays. That sometimes works a lot if gold has been consolidating for pre-New York and New York Open. But it's all based on, like, you know, just look at gold on high impact news and see how it moves. That's the best way to look at it. All right, let's see how this candle is going to close. The 30-minute candle is looking pretty. Oh, wow, look at that. Look at that close on the 30-minute time frame. What does that look like on the 15-minute time frame? Yeah, let's see over here. If we can get a move before FOMC, I think that's going to be pretty nice. Let's see here. This is a 15-minute time frame. And all what I'm looking at is a potential move below these wicks to the left-hand side, maybe below 1733. Yeah, maybe below 1733 would be good. Oh, dang. See, candle close with no wick and price, where'd it go? Went the other way. Wow. Crazy. Crazy daisy move here. Price literally had no chill and just rocketed the other way as the candle closed with no wick at the bottom. Looks like it's coming down now, after making a top wick. In the last minute. Oh. All right. This is the new 1-hour candle, right? New 1 hour. So the previous 1 hour candle closed bearish. 30-minute candle has no wick at the bottom. This is something, now I know some people here in the Zoom chat, you guys have seen this happen before, right? So let's draw this right here. I know you guys have seen this happen before, that we have a bearish candle, right? We have, let's say, another bearish candle like this. And then you have some sort of a, like, you know, a bullish candle with a big wick. And when the next bearish candle breaks the low of the previous bullish candle, you have a complete meltdown. Who have seen this happen before? No one? Okay, no one. I've seen this happen. Oh, okay, there we go. ABB has seen this happen before, right? Because the whole idea is that, look, Seeing you take these trades, yeah, perfect, right? So this is exactly what's happening here. Strong bearish volume, candle close with no wick means no range. Next candle closes bullish with no wick at the bottom, which means heavy bullish momentum, but a huge rejection. And we're moving into pre-NY volume at this time. If this candle breaks the low of the previous candle, there's a very, very high probability we're going to continue moving down. This is only based on something we've seen in the past. And this is where impulse entries, they work the best. So this is where we're going to be looking to take a sell over here, 1734, which is like 9 pips away. Yeah, so we're going to use like a 2% risk over here, obviously. And okay, so sell stop loss up there. Sell stop is going to be down here. TP, we're going to remove it later. Stop loss, we're gonna. So once it gets activated, then we're going to adjust the stop loss based on how much bigger this top wick is. So first we need to get this activated here in case it moves. Now the thing with gold is sometimes it can move really, really quick, right? So that's why I'm having a stop loss right here to catch it during the simulation. And yeah, let's see. Once it gets activated, then we're going to talk about the stop loss. Oh, wow. Didn't get activated. Nice. Oh. Uh-oh. Oh, got activated. All right. So now the stop loss is going to be above this candle that broke the low. Because if it broke the low, there's a very low chance that it's going to continue moving up to break its own high and hit the stop loss. Very, very low chance. Now remember, that can still happen, right? That can. Someone is saying this is new. This is something I've seen all the time in the charts happen with a lot of volume. All the time I've seen that happen. And it just works. Most of the times it works. Yeah. So you gotta, so that's why I say, whenever you miss trades, look at the chart and see how you could have executed in that trade and try to explain to yourself. I explain charts to myself all the time whenever I miss trades, right? So that's when you kind of like, realize certain things that happen over and over again and how you can execute on them. All right, beautiful. Coming up towards this filling of the wick. Oh, nice. Look at that. Look at that move. Oh, 18 pips here. So we're going to close partials here. Target is remembered, 1729. We're coming down over here, but closing partials right over here. If this happened in GJ, do you do the same thing? Absolutely, because it has a lot of volume. Imagine being able to pause the market this way. Yeah. Well, I don't have magic keys because magic keys is just one press of a button. Wow, 1729 is going to come in over here. We are going to come into 1729. This setup I've seen a lot of times also in GJ. Yes. Candle. The idea is that this bullish candle closes with no wick at the bottom, and it has a long exhaustion wick, and the next one just breaks the low. Oh, wow. Damn, Daniel, this is going down here. 50 pips over this position. Close this right here. All right, we're up 5.9% here. Almost up like $300 on the $5,000 account. How many pips was that? 50. That was what I was talking about. Yes, exactly. Wow. Nice trade here. What do we do now? Nothing. We do nothing at this point. That trade was done. We call it a day, and then I guess we can wait for FOMC. All right, let's see FOMC over here. FOMC is at 2100 hours, 18, 19, 20, 2100 hours. All right, FOMC coming in hot. For this, we're going to use 0.25% risk. Yeah, 0.25% risk we're going to use for FOMC. We're going to have some buy stops, and then we're going to have some sell stops. All right, here we go. We're coming in, looking at the 30-minute time frame, 15-minute time frame. Let's slow it down over here. What's the best advice you can give someone on done for the rest of the day? Just close the charts. Best advice, very simple. Just you're done for the day, close the charts. You took one trade, won the trade, close the charts. Okay. So may have a sell stop down over here. Yeah, let's do a sell stop down there below the 30-minute candle. Oh, this is a 15-minute candle. Yeah, sell stop below this 30-minute candle around 17 pips away, accounting for the spread over there as well. Right there, TP all the way down over there. Stop loss, whatever. Okay. And what we're going to do is we're going to have a, okay, 4 hours coming up, okay, whatever. So we're going to have a buy stop right up over here as well. Now, we've paused it, but in reality, it's like, in reality, you just right click and you choose sell stop and you choose buy stop and it's done, right? So we've paused it because, you know, simulation takes a little bit of a longer time. We can do impulse entries above 14 GMT. It's not about doing impulse entries after a certain time. It's about doing impulse entries on things that make sense. That's very important. Things that make sense. We're going to put a stop loss down over here. We're going to put a take profit. Obviously, we're going to move the take profit, but buy stop is going to go above this candle. Okay. So impulse entries depends on the position you're in. All right. Are we ready? Let's see what happens. Straddle time. Oh, did it? Oh, yeah, it did get activated. Only been 3 seconds, 4 seconds. Wow, so sell stop closed. Buy stop got activated. There's very, very, very high volatile news. You know, 6 seconds over here. Look at this move. Damn, 6 seconds. Crazy. 29 pips. Very nice. Straight rejection. What was the event? They kept the rates the same. Obviously, they haven't changed them in more than a year over here. Yeah, they kept the rates the same. Wow. As I remember, I think it moved further on. I think it broke 1737. Oh, yeah, it did break 1737. Oh, wow. Crazy. What's this? 130 pips. All right. Beautiful. Good. Buy stops activated, up. Sell stop, nothing. All right. Let's take a look on the 4-hour time frame. 4 hours like this. Daily. Wow, daily moved bullish here as well. Weekly also moved up over here. Damn. All right, let's move on to the next one here. Oh, what the fuck? Kept on moving. Damn, how much did it move afterwards? Wow, 160 pips. Okay. Let's move on to the next one here. So, oh, what the hell? Still moving over here. London Open, 3 a.m., 4, 5, 6. 6 a.m. Eastern. Price came all the way down, corrected this entire move because it kept the rates the same. So it basically corrected the whole move. Okay. Let's take a look on the daily over here. Daily is rejecting an area in a bearish trend. There's no trend at this point on daily because daily is just coming into a consolidation area over here. Looking on the 4-hour time frame, let's remove all these zones from the 4-hour time frame. So the 4-hour has rejected all the way up at 1750. We're coming down. We're potentially coming down into a consolidation area here in the 4-hour. We're unsure whether this 4-hour candle is going to continue moving bearish or will it continue moving up. That's something we are unsure about at this point. So what we got to do is we got to consult our smaller time frames, the smaller doctor here. Let's consult the smaller time frame over here, see what's going on. So looking at the 1-hour time frame, wow, this candle is closing like a weak bullish candle. So let's create some market structure. We have a support here, which we respected after the rates. Price moved up. We broke the support during the London session, came down. If we continue moving down, our next support is down over here at this point. But also, we're rejecting some support down at 1732 here as well. So this is something we got to identify. What are we actually rejecting at this point? Let's take a look on the 30-minute time frame. So looking at the 30-minute time frame, we are creating a support, right, on the 30-minute. We do have a support that we broke on the 30-minute time frame. So I guess we're just consolidating after this big move that happened in the London session, right? So we got to make sense of it that, okay, which area should we break for price to really continue moving forwards, right? So let's look at the 15-minute here for a tiny little bit and see what can we find. So looking at the 15-minute, yeah, it's very choppy over here on the 15-minute time frame. So we can see right here, there was a support form in the 15-minute time frame. There was a resistance form in the 15-minute time frame. Then there was another resistance form in the 15-minute time frame. So this entire area is a consolidation area. I want to remove this, use the zone over here. This entire area is a consolidation area, other than the fact that if we break above 1739, then we have clean candles to the left where price will move up 45 pips over here. But so far, I guess we're just consolidating over here. If we do break above 1737, it's like a 18, like a 19, 18 pip range over here. Nothing, not even worth it, to be honest. So yeah, I guess we'll just have to wait over here to see where price is really going to move, right? If we do continue moving down, I guess we'll need to break below this 30-minute low for price to continue pushing bearish. And this will be our target over here if we do continue moving down, right? So yeah, let's just wait over here. Let's just wait to see what happens, right? Also, if we break below this low on the 1 hour time frame, we can continue moving down. All right, perfect. Let's see what happens and then see if we can make some more demo money over here. Obviously, we would want it to push up first to make a top wick if we're going to break the low. Given that 1 hour candle close weak bullish, would 1 hour impulse entries make sense? Yes, 1 hour impulse entries will make sense. Right here, the 1 hour impulse entries, they will make sense if this candle wicks up and breaks this low to fill this wick and then continue on pushing down. That will make sense. But we wanted to make a top wick first, right? If we can make a top wick first and then break the low, then impulse entries are 100%, they will make sense, right? So see, right now we're making a top wick. So if it breaks the low at this point, then it will make 100% sense. But if it closes bullish, then it would make sense for it to continue moving up, right? So we're keeping in mind both scenarios, buys and sells. So we're only going to execute it based on the 1 hour time frame here. My green tea's gone cold, I wonder why. Okay. Moving pretty realistically slow over here. Just waiting here now. Just waiting for it to break this low and then we can possibly take a sell. Pretty decent wick over here, to be honest, if it's going to continue moving bearish from this point onwards. Like it very much. All right, here we go. Coming down now slowly. Coming down, 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 down. The stop is going to be, oh wow, 30 pip stop. 30 pip stop loss. That's a pretty big stop. Let's see how this looks on a 30-minute time frame. Yeah, it's like a 30 pip stop. Yeah, we'll have to do some adjustments over here. Gold needs some attitude adjustment. 30 pip stop is a monster stop. We'll see if we can have it based on a 15-minute time frame or something. But it should break the low on the next 15-minute candle if we're going to have a stop based on a 15-minute time frame. Oh, there we go. We are breaking the low over here. Let's take a look on the 15-minute time frame. Yeah, it's okay. So I'll take a sell, obviously, but the stop is going to be kept within this range. You're looking at price to continue on pushing bearish over here. And the reason I'm taking a sell over here is because obviously we're breaking the low, but the stop loss, not willing to put it above the candle. This is something like the same trade I took on, we took on interest rates on pound yen on Thursday, where price wicked down, if you guys remember. You guys remember, right? Okay, let me pull this up right here. Look, GBP JPY. Oh yeah, you guys remember here. Let me pull up this. Give me the markets right here. Oh, where is it? Yeah, right here. This was pound yen 30-minute time frame. Yeah, right here. Took a buy right here as it broke the high. The stop loss was kept somewhere down over here in the middle of this range rather than below this candle, because if we broke the high with volume, then there was a higher probability for price to continue moving up, right? So this is exactly the same idea right over here. Taking a sell as we're breaking the low, very, very bearish momentum, correcting this whole move ideally, right? That's why having the stop in the middle of this range here rather than on the top of the wick, because the stop is too big. If we're breaking the low, then there should be, then it should have no business coming back up in this range. It should just continue pushing bearish. Oh, what the hell is this? This is a 0.25 risk. We're missing 0.75. Damn. Missing 0.75. This is where we can add 0.75. Actually, this could be a very good idea to possibly do dynamic entries, because if we think if it's going to continue pushing down, we could possibly do dynamic entries. Yeah, makes sense. Okay, remove take profit. Perfect. Dynamic entries, right? Perfect. So we added a position. We should continue pushing bearish over here. This candle will also be coming to a close over here, and then we'll see if the next candle continue pushing bearish here or not. Obviously, we're looking for price to fill the wick at the bottom. There's a lot of volume over here. The 30-minute candle is also coming down to a close. We're about 5 simulation. Oh, wow, look at that. 14, 15 pips in at this point. Let's close the smallest one. We're going to leave one open because, oh yeah, 4-hour is coming down. 4-hour has clean candle through the left-hand side. And if we break this low on the 4-hour, I think we can continue on moving down. 30-minute candle is open. We're rejecting this area. Let's just wait to see how this 1-hour candle is going to close. Uh-oh, we're coming up over here. So let's close 50%, right? Because the idea is still bearish. We're waiting for the 1-hour candle to close, right? So since we're waiting for the 1-hour candle to close and we have a smaller risk earning at this time, I think we can leave this open at this point because we're already up for the week. So now we're going to use our profits for the week to expand on more profits. Yeah, it's probably going to come up to the stop loss here. But we're waiting for the 1-hour candle to close. And also we're going to use our profits for the week to see if we can kind of like, you know, make some more profits over here. Let's take a look on the 30-minute time frame. 30-minute is perfect, right? We're creating that candle over there to the small candle that we had before. I think it was right over here. Yeah, if we can do that, I think that's going to be wonderful. Got about 5 minutes left for the candle to close. Anything can happen in the last 4 minutes of gold, 3 minutes of gold, 2 minutes of gold. Anything can happen. Look at this. Look at this. Doji, we break the low and we can continue moving down. We have clean candles to the left-hand side. Looking on the 4-hour time frame, we break this low, we have clean candle. It's just beautiful. You know, this is just asking to go down. All we need to see is a wick to the top side, just like that happened in the previous candle, and then boom, 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 we can go down and add more positions, right? So then it's basically kind of like, you know, using the profits from the week to make some more profits. But we need that confirmation. If we hit stop loss here, you know, if we hit stop loss here, let's take a look at this, right? Modify. If we hit stop loss, we lose what? $13, right? Take this in. If we hit stop loss on this trade, we lose $13. And $13 is what? Nothing from what the profits we've made. We're still going to be up like 6%. You know, but if we break this low and we add a position, then we make way more than $13, right? So that's why we're leaving this position open. So you got to accept the risk. If we had stop loss, I've accepted, we lose $13, no big deal, no problem at all. Who cares, right? But if we can break this low and then have a move down, clean candles here on all time frames, I think we can make a whole lot of money over here. All right, come on. Let's take a look on the 1 hour time frame. Yeah, look this 1 hour time frame. Wow, looks like it's not going to go down here anymore. I mean, if it breaks the high of the 30-minute candle, oh yeah, it has broken the high. What is it doing? It's just consolidating on the 15-minute time frame. 4 hours just retracing. Oh, there we go. Now we have some movement over here. We have some movement here now. Speed it up here a little bit. Oh, not too fast. Got to be able to react to price moving. All right, baby girl. We're going to go. 15-minute candle is about to close. 15-minute candle has closed bullish. We're still consolidating. 30-minute candle still open. 1 hour candle still open. Okay, we're coming down here on the 30-minute time frame. No, not anymore. Oh, we are coming down, coming up, coming down, coming up, coming down. We need to break that low here. If this was a live market, would you close the position as previous closed doji candle 30-minute time frame? As I mentioned 4 times, no. Okay, there we go. We're breaking the. Actually, hold on. We didn't break below these areas over here. These are all rejection areas right here. We need to break below these lows, or the 30-minute candle has to close like a weak bullish. Oh, there we go. We're breaking the low over here. Now we're gonna add. Let's pump up the risk over here. Let's add 1%. We're gonna add 1%. Stop loss is gonna be obviously like, you know, within this range over here. We're looking at price to continue on moving bearish at this point. Only because we broke the low, 1 hour candle broke the low, 4 hour candle broke the low, daily is whatever, but the 4 hour candle broke the low. Idea is to continue pushing bearish. 1 hour candle broke the low, 30-minute candle broke the low, 15-minute candle broke the low. So yeah, I guess it should continue moving down at this point. Stop loss should not get hit. Actually, let's see how much is at risk over here on the stop. We have around 52 US dollars. Let's bring it up here a little bit in case it retraces. So $64 at risk over there. May want to move this stop loss down here as well. All right. Oh, there we go. A new 30-minute candle has started. And 1 hour candle has clean range to the left hand side. We're moving in high volume time at this point, pre-New York. There we go. That's the move we want. Maybe continue down to 1729. We can secure a position on this bigger lot over here we have open. 1729 coming in, coming once. Oh, boom. 1729 is in. First position is up 50 pips. Close this position. As you can see, we use profits from the week to you know, make more profits to close 50%, put stops at break even, and yeah, let the rest run. Oh wow. Oh damn, continue down. Look at this 4 hour candle, clean range to the left hand side. Beautiful range to the left hand side. Kind of retracing, probably with the NY open we can drop more. Let's speed it up here. Let's move on to the next candle. Oh, straight retracement. Oh, got stopped out at break even, but continued breaking down. Wow. What a move over here. Still continuing down. Not sure if it's the right place to ask you here. Well, if it's not the right place, it's probably not the right place, but let's see. I wanted to hear from you. How did you manage your emotion when you trade and go your way during NFP? How did you turn off your chart and not revenge trade? And also any tips you believe that can help? You answered your question. NFP didn't work out. I closed my charts. That's it. Just walk away. There's nothing more that I can say to kind of like, help you with that, honestly. Just close your charts. Your risk is the risk you take. I took my risk. I knew the risk I was taking. And I mean, that's basically it, That's why I tell guys that, hey, if you're going to trade news, put aside 10% off what your account is. If you got a $1,000 account, put aside $100 to risk on news. If you got a $10,000 account, put aside $1,000 to risk on news. Nothing more than that, unless you get really comfortable, because things like that can happen too. So you just gotta close the charts, walk away, come back the next day. That's it. Losses, you can't get them back. Just like when your ex runs away, you're not gonna get that back. So losses are the same thing. You're never gonna get that back. Sometimes you do, but most times it doesn't happen. But call the market for a refund. Yeah, call the market hotline. All right, everybody, I'm gonna head off over here. I got some things to do. Probably gonna be at the Dubai Forex Expo. So if someone's there, we might want to do something over there. But let's see what happens. Okay, take care. Thank you for joining in. I really appreciate it. This is going to be in the database in about 2 to 3 hours. And yeah, I guess we're going to see you guys on Thursday. The live stream is going to continue on Thursday. I think this was a very, very good simulation over here. I kept things as realistic as I could. We risked around 2%. We risked 1%. We got around 8% profit so far. Pretty decent, I would say. Just waiting for candles to close and some sort of impulse entries. So take care, everyone. Have a great, great, great weekend.